pen in one state. If you are having another hotel in Gujarat or Delhi or Goa, there will be separate registration required in that state. But within Maharashtra, you will have only one GSTIN. But in your hotel industry, sometimes you feel that my all hotels are working separately. Management has been given to one person. One person has been given charge of that hotel. He is responsible for all that. The other hotel unit may not be supplying anything to that hotel, and all are working independently. In that case, there is a provision that you can have multiple numbers within the state by saying different business verticals. Two or more business verticals, you can have different registration number within the state also. So wherever we feel that our units are working independently and they should comply with the requirements independently without mixing up everything at one place, then it is possible that you can take separate registration number for different locations, different hotels within the state also. So as far as different states are concerned, compulsorily different number has to be there within the same pen. But within the state also, if you want to opt, you can opt for separate registration for your separate units. If you have already migrated, within 30 days till 30th July, you can apply for separate number for your separate units if you feel that is advantageous to us. The only disadvantage would be that if there is any supply from one unit to another unit within the state, that will be chargeable to tax. That concept of branch transfer, stock transfer will not work. Once different number is there, it will be considered as a distinct person and all the provisions will apply accordingly. So that is the only disadvantage. Otherwise, for separate units, it may be advantageous to have separate number depending upon, of course, your administration, how you are administering. The greatest benefit of GST will be that will be eligible to claim input tax credit. As far as hotels are concerned, today for accommodation, providing accommodation, we are purchasing a lot of goods on which we are paying VAT. And because on hotel accommodation there was no VAT, we were liable to pay service tax. That credit of VAT was not available to us. Now everything, whatever we are purchasing, on which we have paid tax, we are entitled to claim input tax credit, except construction of building. On building construction, no SENVAT available, no input tax credit available, but whatever other things we are purchasing, furniture, air conditioner, equipments, kitchen equipments, whatever things we are purchasing for the hotel or restaurant, amount paid to your supplier by way of GST will be eligible as input tax credit. And that will be a very big amount if you calculate. Just go through your balance sheets for last few years. How much VAT you have paid. Particularly if you have set up a new hotel. It will be a great advantage to all hotels and restaurants, because the full amount of VAT will be, you are eligible for input tax credit. Similarly, those restaurants, in restaurants you are eligible for input tax credit of VAT paid on goods, but service tax paid on services was not eligible for input tax credit. Now all those service provider will be charging you GST. So whatever GST they have charged, you claim as input tax credit. And this input tax credit can be claimed in the same month in which you have received the invoice. Provided you have also received the goods, not only invoice. In the same month you claim, it may be possible that in some of the months your purchase input tax credit is more than your output tax liability. You can carry it forward to the next month. Only problem will be that today you may be filing quarterly returns under VAT, or some of you 6 monthly returns under service tax. Now you will have to file monthly returns. Every month returns have to be filed. Whatever liability on sales side, you have to calculate. Whatever input tax credit on purchase, you will calculate, and difference you will pay. Output tax minus input tax you will pay to the government within 20 days from the end of the month. HSN code not required. Zero rated supply in our case, most of the cases may not be there, zero rated supply. Import of goods and services. Imports may be there. We may be importing certain equipments or certain material from outside India. Even raw materials, some of you may be importing from outside India. On that, IGST will be levied by the custom authorities. And whatever IGST is levied, that is available to you as input tax credit. Whether it is CGST, SGST or IGST, whatever you have paid on your purchases, on your supplies received, whether of goods or of services, everything is available as input tax credit. Except two things. One is that construction of building, and second is purchase of passenger motor vehicle. On these two things it is not available. Third thing is of course it may not be applicable to you. For others it is applicable, that amount paid to hotel and restaurant is not eligible for input tax credit. So if I come to your restaurant, consume some goods, I pay you 500 rupees, you charge me 90 rupees as GST, that GST credit is not available to me. So your customers are not eligible for input tax credit. As far as restaurant sale is concerned, food and beverage is concerned, input tax credit is not available to the consumer. Constitution we need not discuss now. All form of supply is specified supply made agree to be made without a consideration. Supply for a consideration is liable to tax, and the taxable value will be the transaction value. in all cases, transaction value will be subject to tax at whatever rate of tax is applicable, except in certain circumstances. If it is to related person, and you are charging lesser amount, then the question of valuation may arise. If it is in the course of furtherance of business to a normal customer, you are giving discount, etc., that is not a question. But to a related person, you are charging less, then it may be subject to valuation rules. Otherwise not, the transaction value to be considered as the final price on which tax is applicable. In case of water transactions earlier were not liable to tax under VAT. Now these will be liable. In water transactions, we have to value the goods or services, whatever it may be, moving from one person to another person and coming from another person to one person. We have to value, and accordingly tax has to be paid on those water transactions. Who is not liable to tax? Aggregate turnover includes what? This composition amount of 5% is comprising of 2.5% CGST and 2.5% SGST. Although you are not collecting from your customer, those who are opting for composition scheme, you can opt for composition scheme up to 30th July with effect from 1st July. But while paying the tax, you will be paying 2.5% CGST, 2.5% SGST. This 50 lakh has become 75 lakhs. Exemptions. As far as hotel industry is concerned, there are no exemptions. All your services are liable to tax. Even those hotels which were enjoying that package scheme benefits in Maharashtra and other states, all those schemes will not be there now from 1st July. So those hotels also will have to charge normal tax. Whatever benefit you have to take from the state government, you will be taking by way of subsidy or refund, etc. Valuation, as I said, transaction value. Amount actually paid or payable. That is the amount on which tax is payable at the applicable rate. Not necessary valuation rule will apply in each and every case. Only those transactions which are within the related parties, there this may apply. Transaction value, whatever discount you have given. Okay. Whatever discount you have given in the bill, after reducing the discount, the tax will be payable. For claiming input tax credit, you must have a tax invoice issued by your supplier, and in that tax invoice, please ensure that he is putting your GSTIN. To all your suppliers, you will have to give your GSTIN. So, and whenever you receive an invoice from them where they charge you CGST, SGST or IGST, please ensure that your GSTIN is mentioned. Because for claiming input tax credit, 3 or 4 things are must. Number 1, you must have a tax invoice issued by your supplier. Number 2, you must have received actually received the goods or services for which bill has been issued. Number 3, the supplier must have paid tax on the suppliage. And this will be verified through the returns to be filed by GSTR1, GSTR2, GSTR3 to be filed by you and your supplier. It will be matched. When the supplier sells the goods, he has to furnish invoice-wise information of all invoices issued to the registered dealers. And when you upload your purchase invoice or claim for input tax credit, it will be matched with that. If does not match, then your input tax credit may be denied. And he will be able to mention this only when you have given your GSTIN to him. If your GSTIN is not available with him, he will upload information. Without your GSTIN, you will not get credit. So please remember that you have to see that he is mentioning your GSTIN. And as far as capital goods is concerned, while accounting for capital goods, please remember that the GST portion should not be included in the cost of assets. It should be kept separately. Because if you see that principle of accounting, whatever taxes you are eligible to claim input tax credit or from the government as refund, this is not your cost, this is your asset. So it should not be included in the cost of product. At present, we may be accounting all those assets item, including of VAT, but now onwards, from 1st July onwards, the GST portion should be accounted separately, for which input tax credit has to be claimed, and only the net cost should be accounted as cost of the assets. Now, because that time is very short, what we'll do, we'll deal with some of the aspects which are concerned with hotel industry. I have tried to list out some of the services which are being provided by the hotel industry. That first is that room accommodation services, serving of food and liquor in restaurant, serving food liquor in the room, rent a cab, mandap keeper, foreign currency exchange, supply of packed food item through minibar. In the minibar, you are keeping certain items which if the customer consumes, then you are billing. Renting out of premises for events and conferences, catering services, laundry services, business support services, telecommunication services, beauty parlor, gymnasium, and club facility. Broadly, but I could imagine that these are the services provided by the hotel industry. Now, how these will be taxed? All these items are taxable. None of them is exempt. Our services are falling in heading 9963 of Service Accounting Code. Hotel accommodation by a hotel, guest house, club or composite. for residential or lodging purposes, having declared tariff below 1000 rupees per day. If it is less than 1000 rupees per day, then nil rate of tax. No tax to be charged. I think in Mumbai may not be. Now the next para is important here. What is declared tariff? Declared tariff includes charges for all amenities provided in the unit of accommodation given on rent for a stay like furniture, air conditioner, refrigerator, or any other amenity, but without excluding any discount offered on the published charges for such unit. Whatever charges you have published, your leaflet may be there, or on your website you must have given, or somewhere you have published that these are my rates. And these rates may be, you may be offering different rates for different category of persons. You may be offering different rates for different seasons.